Sprinkling your finances is just as important as sprinkling in the house. The issue is when it spirals out of control. Nobody thinks that a credit card is actually debt.
Welcome to The Big Question, the series from Euronews addressing some of the biggest topics in the world of business. Today, I am joined by Kevin Mountford, co-founder of saving platform Raisin UK, to discuss all things debt. Thank you so much for joining me today, Kevin. So I think a lot of people feel a lot of shame about discussing debt, but it's actually incredibly common. How many people in Europe are living in debt right now?
If you look at Europe as a collective, there's around $7 trillion of debt or of borrowings. And I think that's a big difference because we're all used to borrowing money for different reasons. I think the issue is when it spirals out of control. But if I break that down to an individual level, that's around $10,000 per person. If we look at the amount of borrowing to income, then that's where it can become a bit of a challenge. So across Europe, it's about 97%. But you've got some countries like the Netherlands, Norway, 200% plus. Yes, the income's higher in some of these jurisdictions, but the borrowing, relatively speaking, is higher as well. So the issue is not borrowing in itself, but that borrowing going out of control and debt that we no longer can manage.
Thinking about the most common reason that people are borrowing and getting into debt aside from mortgages, what is the kind of most common cause of debt?
I think credit cards generally, you speak to your friends and nobody thinks that a credit card is actually debt. It's just the way we live our lives. We all look at our bank statements and realise with contactless, how much we've spent that we haven't really thought about. And to boost the economy, governments are now looking at increasing the thresholds on contactless. So in the UK, it's generally £100, but if that starts to increase, so I think we need to be far more disciplined in managing our household budget. I don't know about yourself, but through the years as my salary's gone up, I've not really been any better off. The more I earn, the more I spend. When that gets out of control, that's when you've got a real problem.
And do you think there's a kind of financial literacy problem and a lack of education in schools that's kind of partly to blame?
So we carried out some research at Raisin and it showed that there was a lack of understanding over things like what's inflation, what's standard variable rate on a mortgage, what's AER, APR, etc. The problem is if you've not got that awareness, you don't feel empowered and in control to make the best use of your finances. So that plays into the hands of the banks and other financial institutions, and we become very apathetic and we don't change products as readily as we should. So that in itself, creates a problem.
Yeah, and do you think social media plays a role in contributing to debt in younger generations?
Social media can be a cause for good, in so much that you can find information, but there's promotional adverts in front of you day in and day out. And I think that the problem being, it creates more immediacy on the back of your aspiration. And don't forget the ease of which you can buy things online now. I've got friends that struggle to sleep. So what do they do in the middle of the night? They go online and they start buying stuff.
Oh, gosh.
So that's where the likes of social media and the kind of immediacy of new technology can create problems. So we just have to be careful.
What are the long-term ramifications of getting into debt at a young age?
Worst extreme is you could face bankruptcy, get assets seized, but also your credit scores. When you're older in particular, you might want a mortgage or you might want a car loan, etc. That's going to go against you. So the worse your credit score is, then you fall into kind of subprime categorization. The interest levels you get, people are prepared to give you money, but you'll have to pay more for it. So it becomes a downward spiral, really.
So for those already in debt, what are the key steps to take to get out of debt?
Accept the fact that you're in debt. What you don't want to do is compound the problem by allowing the debt to get out of control. So talk to somebody. Don't bury your head in the sand. If you've got a loan provider, it's your mortgage, unsecured loan, whatever it might be, talk to them. There might be ways of rescheduling your finance to ease the burden a little bit. There are ways you consolidate loans. So what happens is you pay the loan back over a longer period, but your outgoings are reduced. So there's different ways of tackling this. There's certainly people out there that would try to take advantage of your situation. So if you need any debt-related advice, there are charities out there. There's a way of getting free advice as opposed to paying for it, because you don't want to be paying for something when you're struggling with finance to start with.
For people who maybe do manage to pay off debt, what do they need to do going forward to stay out of debt?
I think it really is about budgeting, sprinkling your finances is just as important as spring cleaning the house or whatever. I've just changed car insurance. I've saved £130. I've just changed broadband provider. I've saved £500 a year, or whatever the case may be. It's money in my pocket as opposed to the bank or the insurance provider, or whoever it may be. But I think quite an interesting thing is maybe as a family or as a group of friends, why don't every quarter or 6 months sit down over a bottle of cheap wine, because you don't want to overspend, but why don't you just have a look at your outgoings, have a bit of a competition, trying to reduce it.
What are the next steps to create a kind of positive financial situation going forward?
I think awareness, education, real understanding the terminology, getting to a point where you feel empowered. So, Raisin as a savings platform. Taking the UK as an example, there are hundreds of millions of pounds sitting in accounts paying 1% or less. From our platform, you could get 3-4 times that. So that's money in your pocket and not in the bank's pocket. So just do something about it. You've got deposit guarantee schemes across Europe that's protecting your savings up to certain limits. So there might be a brand that you don't recognise and you stick with a high street bank because you think your money's safer. Yeah. Well, in some respects that might be the case, but under the deposit guarantee scheme, whether it be €100,000, whether it be £85,000, your money's protected. So go with the regulated entity that you might not know, but you'll get a better return on your savings.
Looking across Europe in the future, what is the economic outlook and how is that going to affect us?
I think it's a challenge, and it's a challenge because if we look at it globally at macro level, we've still got conflicts around the globe. You've then got the ramifications of the Trump regime, and that we possibly could have a trade war with tariffs and retaliation from countries that are affected. So from a central kind of banking perspective, one of the tools they've got is interest rates. So we saw that inflation was double digit, so they put up interest rates, means there's less money available, so we spend less because it's supply and demand. Inflation is coming under control, but there are potential issues because of this trade war situation. And I think the European Central Bank will, as we get into the summer, reduce rates. There is a view that it'll get down to 1.75%. It was over 3% back end of last year. So if you bring inflation down, that kind of cost of living crisis reduces, interest rates come down, then anybody who's got borrowing linked to interest rates will end up having lower payments. So all of these are positive steps. So for a lot of people that are facing debt challenges, that'll be a consequence of high interest rates and high inflation. As they ease, some of those debt levels will naturally reduce. So let's hope that when we get into the summer, then that eases the debt burden on households across Europe and beyond.
Well, thank you so much for your insights today, and thank you very much for joining me on The Big Question.
And thanks for having me.